Step 2. So now that you know what your credit score is, you need to talk about money. You need to run the numbers and you need to be aware of what it is you can afford. First of all, let me make this very, very clear to y'all. Keeping up with the Joneses will keep you broke. All cars have one purpose, and that is to get you from point A to point B. The package that is wrapped up in is just a plus. I know that y'all want to flex. I get it. I'm bougie on a budget, okay? I like to look rich, even though I don't quite have my riches yet. We'll get there. But I also want to make sure that I'm setting myself up for success in the future. If I don't pay attention to the way that I'm spending my money now, I'm creating this bad habit that'll be harder and harder to break, especially with the more money that I make as I grow older and eventually adding children and a family into the mix. It's okay to sacrifice now so that you can be winning later. Instagram doesn't care about your finances. They're not gonna help you with a down payment on your home. They're not gonna help you get approved for a loan or a mortgage on your home or anything else that you might need credit for. So make sure that you're making good financial decisions now, because baby, your kids and your grandkids and every other generation after you will be very, very happy in the end. A car is a depreciating asset. We all know that. And basically what that means is once you buy it, as soon as you pull that thing off the lot, there's money flying back with the exhaust. As the exhaust comes out of the tailpipe, so does money. That being said, when you walk into a dealership, you want to make sure that you're walking out with something that you feel comfortable with, that you can pay off soon, and will at least have some sort of equity left in it by the time you're finished paying it off, and you won't owe more on the car than what it's worth in the end. Now, if you do a Google search, most places will tell you that the total cost of your car, maintenance, gas, the car note itself, car insurance, in total should cost no more than 20% of your income. I feel like that's a bit much. It all depends on how much you make, but that's a lot, okay? No. I think that it's more so a sliding scale, and it all depends on how much money you make and how much money you're bringing in. If you're only making $2,000 a month and your expenses without your car are like $1,200 a month, maybe you should only be spending $300 total on your car. I want you to win. I want you to win. There's a couple of ways that you can do this. One, you can Google a car loan calculator, right? So right now I'm talking about actually purchasing and financing a vehicle. We'll talk about leases in a minute. You go online to a payment calculator. Let's say you want to buy a used car that cost $20,000 and you're going to put a down payment of $2,000. So that means that you'll be financing $18,000. Go online, put in that amount of $18,000. How long do you want to be paying this car off for? 4 years, 5 years, 6 years? Typically 5 years. 4 to 5 years is the best bet. Especially if it's going to be a used car, you should try to stick closer to 4 years. And what you think your interest rate will be. That's why you've checked your credit score first. So you do a Google search and you see what the typical interest rates are for people that are in your credit score range. So let's say that you're in the average range, and interest rates range from 4 to 7%. So fall in the middle of that and go like 5.6%. It'll tell you what your estimated monthly payment will be. If it's higher than what you wanted, then you need to play around with the number of the purchase price until you get the range of what you feel like is a good amount for you to pay monthly for your car note. Once you find that range, then it's time to start looking for cars. Keep in mind, the longer the loan term may increase the amount of money that you can borrow in total, but you'll end up paying a lot more in interest over time. So just keep that in mind and make sure that you're playing around with those numbers as you're looking at the loan calculator. If you are looking to lease a vehicle, there are different factors that you need to take into consideration. If you have a car right now, think of when you actually got the car, how many miles you had on it, and how many years you've had the car. Do your mileage now, subtract how many miles you had when you first got the car, and then divide that by how many years you have had the car. and that'll give you the amount of miles that you drive per year. If you're under 15,000, then leasing might be a good option for you. If you are over 15,000, then purchasing a vehicle is probably your best bet, unless you can practice self-control, curb your driving, or if when you first got your car, you had a job where you drove a lot and now you don't drive as much. So there's a couple of different factors to take into consideration when thinking about leasing over buying. So make sure that you're doing your research and just looking up whether or not it's better to buy or lease a vehicle. If you don't belong to a credit union, there are a number of benefits to being a part of one. So make sure that you do your research and you join one if you feel like it's the best fit for you. You're typically going to get the best rates on auto loans, mortgage loans, credit card rates, etc., at a credit union. So don't cross it off the list too soon. Just do your research and see if it's right for you, okay? But if you want to kind of be proactive and know exactly what your interest rate will be, exactly how much money you can afford before you get to the dealership, I would say go talk to someone either at a credit union or at the bank that you use already, and just see the rates that you can qualify for. And also don't be afraid to, try to negotiate with them as well and see if there's other options that are available. First time car buyer programs or college student programs. Don't be afraid to ask if there are any programs available that can help you, because sometimes people just aren't going to tell you outright, because it's every man for himself, it seems. So just make sure that you're being proactive and you're asking to see if there's anything available for you, because 9 times out of 10 there usually is something. This is the second video in our car buying series, so make sure that you click on the next video in the description box below.